equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast that follows our journey of investing. Whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. I'm very excited for this episode. We're exploring a topic that we get very excited about, but we don't know a lot about. So I'm very excited to know a little bit more about it by the end of this episode.
That's it, and we are very excited to welcome an expert to help us understand more about this exciting thematic, and it is our pleasure to welcome William Studebaker to the studio. William, welcome.
Good morning. Great to be here. Look forward to helping to educate you guys on robotics and AI.
So William, I will refer to him as Bill throughout the episode, is the president and CIO of ROBO Global, the company that builds the index that's behind the ETF Securities Global Robotics and Automation ETF. The ASX Code is ROBO. And today we're going to be chatting with Will about state of the robotics industry and, you know, how this thematic is really playing out and the investment opportunities that it's presenting. So, Ren, let's kick off with a bit about the ETF and then get stuck in.
Yeah, well, Bill, as Bryce mentioned, we're here to talk global robotics and automation. It's a topic that seems to be on the forefront of a lot of investors' minds, especially with everything that's going on at the moment with supply chain crises. So we're excited to get into all of that in today's episode. But let's start with the ETF and the Robo Index that you build. What is it designed to give investors exposure to?
So just by way of background, so everyone understands what we do, we are an index advisor and research company that is specifically focused on helping investors capture what we believe is a massive opportunity in the fast-growing areas of robotics, automation, artificial intelligence, and healthcare innovation around the world. And believe it or not, we were actually the first company ever to have created a robotics and automation strategy that we brought to market. And we did it almost 9 years ago. And our strategy is designed with deep fundamental research, really to capture the best of breed companies globally that sit within what we call RAI, which is robotics, automation, artificial intelligence ecosystem, where we're trying to capture the technologies and the applications. And, as I said, we did this, interestingly enough, 9 years ago with the belief that we were on the cusp of ubiquitous automation. And, at the time, most sort of understood robotics and AI to be kind of like Elon Musk's science fiction technologies, but we had a much different interpretation, which was that these technologies weren't science fiction and weren't niche. Rather, they were what we call foundational technologies that are really being applied to all industries and all markets. And as a result, we believe that these technologies had the potential to be far more disruptive in what many understand the internet to be. I mean, I think we all understand the internet now, but back in the late 90s, no one really understood the internet. But the internet, transformed how we socialize, how we consume media, brought about search and e-commerce. And, that's it. Again, these are technologies, robotics and AI, that are going to transform, every industry. And it is interesting, when we launched, we were one of only a handful of thematic technologies globally. I mean, I think we were one of 5 or 6 companies that had created a thematic, sort of idea. Now there's hundreds that are attempting to do this. And at that time, and even now, the challenge with Wall Street has been on the inability to invest in thematics because it's sort of not ticked specific Wall Street style boxes, if you will. And as a result, they were often overlooked by investors. But, this is changing. And I think investors are beginning to understand the power of disruptive technologies. And so we're pretty excited. COVID has really ignited the robotics and AI arms race. And I think as we look forward, we're not going to automate, less. It's going to be increasingly more and more. So I think this is something that should be important to all investors and consumers.
So, Bill, it's an index that has a lot of companies in it that we haven't really heard of before, and I think that's what's exciting about it. There's so much sort of innovation and opportunity to explore new things. Are you able to tell us how this index is put together, and in particularly the panel of experts that assess the companies that then, guide and go into this index?
Sure. Well, the most important thing we did 9 years ago that required a lot of heavy lifting that no one had done before was to identify and classify the entire global ecosystem of robotics and AI, and to make sense of this sort of unstructured opportunity meant that we had to research, the entire world to identify and segment companies inside what we've identified as our own proprietary subsector classification system. And we did this with a team of not only financial, but industry experts. We actually have 7 advisors on our team who are PhDs in the field of robotics, AI, and automation. And they're on the front lines of building the technologies and the industry. Many are entrepreneurs and have identified and have developed technology in companies that are in the front and center of our lives. I mean, one example is a gentleman whose name is Rafti Andrea, who was one of the co-founders of Kiva Systems. And Kiva Systems is now Amazon Robotics. And that's the 300,000 robots plus inside of Amazon that allow fulfillment to happen not inside of weeks, not inside of days, but soon to be, inside of hours. And so he was building warehouse algorithms back in 2005, and he has 2 partners sold out to Amazon in 2011 for $800 million. And this really helped sort of captivate the robotics and AI arms race, particularly in warehouse and logistics automation. So their insights, as entrepreneurs and industry thought leaders, coupled with, our deep domain expertise, cannot be very easily replicated by others. So again, we sort of researched the global value chain to identify companies that we see have high revenue purity in robotics, automation, and AI, that have industry leadership and have technology dominance. And we then sort of apply an ESG filter that captures the companies that comply with sustainable investing, and out pops a portfolio that's really very differentiated relative to traditional indices or versus almost most all portfolios that investors that own, because these companies, believe it or not, are not owned by many investors. And it's a portfolio that we rebalance, quarterly. We essentially have a weighting scheme that gives investors exposure without a lot of excessive risk and lower volatility. Our top 10 names, as an example, represent less than 18% of our dollars or the weighting, and this has generated returns the last 3 years that are pretty commendable. We've generated 21% CAGR the last 3 years in the strategy, and we think that this is, the start of many more years to come.
Yeah, I think it's a really interesting ETF. When I first looked at it, I expected to see Amazon in there because when I think of robotics, I think of an Amazon warehouse. But I was surprised to see that Amazon wasn't in there. But the point you made there about revenue purity, I think, is an important one to stress. The companies in this index and in this ETF aren't just using robots, but they have to actually be making money from robotics and automation. So a company like Amazon that benefits from it, from robotics, but doesn't make money from robotics, won't ever be in the index.
Well, that's right. So what we're trying to do is, we're going to the gold rush and we're identifying, the sort of picks and shovels. Amazon has done a remarkable job of using these technologies to enable their business, but they're not, profiting directly from selling these technologies. So there's certainly, an area and value for that in investors' portfolios. But I think increasingly, almost all companies are going to have to use these technologies to enable their business in terms of improving productivity and generating higher growth. So I think all these technologies have an inevitable use case in virtually every business and every business model. So that's what we're focused on, again, is sort of the picks and shovels. The technologies and the applications is what we're focused on.
So, Bill, let's have a chat about the state of the robotics industry. No doubt that COVID has accelerated a number of trends, e-commerce being one of them. And we imagine that this certainly holds true in the robotics industry as well. Let's start at the top. How would you describe the state of the robotics industry going into 2022? Did COVID have some sort of an impact as well?
I would say that the state of the environment is, for lack of a better word, on fire. the COVID crisis sparked a wave of innovation and has launched a generation of entrepreneurs. And I think, the philosopher Plato kind of was pretty right when he said, necessity is indeed the mother of invention. And one area that has seen tremendous growth is digitalization, meaning that everything from, online customer service to remote, working to supply chain, reinvention to the use of artificial intelligence and machine learning to improve operations. Healthcare has changed substantially with telehealth, and healthcare is moving now to a model of prediction prevention, and that relies on data and analytics, which is digitization. Globally, COVID brought, a flood of new businesses to market almost overnight. In the U.S. alone, the third quarter of 2020, just to give you an idea, there were more than 1.5 million new business applications. And that's almost double the figure for the same period in 2019. And we're seeing varying degrees of this happen and benefits, in countries really, throughout the world. So, I would say digitally enabled productivity gains, have accelerated really the fourth industrial revolution. We're at the early innings of this, and, we're not really even in inning one in U.S. baseball parlance. I would say that the players are in the locker room, getting their clothes on, or in a cricket game, they're just, getting their shoes right on. And, we've seen like the shift to online retail is real. And this is going to stick. In the United States, the penetration of e-commerce was forecast in 2019 to reach 24% by 2024. And by July of 2020, it had hit 33% of total retail sales. So to put it another way, the first half of 2020 saw an increase in of e-commerce equivalent to that of the previous 10 years. This is all a function of robotics, automation, and artificial intelligence. So there is tremendous growth in the years ahead.
Well, Bill, as we enter 2022, two of the biggest stories in financial markets seem to be accelerators of robotics adoption. The disruptions we've seen in supply chains, and then also the labor shortages that we're seeing, particularly in the US, but around the world. How are you seeing companies respond to that? Are you seeing companies accelerate their robotic strategies in response?
Well, I think clearly, without question, the answer is yes. I mean, the pandemic revealed vulnerabilities in the global complicated supply chain of many companies. The pandemic has has created significant challenges for supply chains globally that have to be solved. I mean, multiple national lockdowns, have and continue to slow or even temporarily stop of the flow of materials and finished goods. I mean, that's disrupting manufacturing as a result. And, in the aftermath of, severe disruption from COVID, we've seen that, enterprises plan to shake up their supply chain strategies to become more resilient, collaborative, and networked. And this is all requires automation and robotics. And to do that, they have to increase investment in supply chain technologies like AI and robotics, robotic process automation, even, guess what, while retraining, workers. I think everyone has the assumption and the illusion that, automation is going to replace, all workers, and we're going to have a workerless society. And I think that is a misunderstanding. I think that automation is creating, new industries and new classifications of work. And I don't think that we can, truthfully identify what the future of work exactly entails. I mean, back in 1900, we had 60% of our workforce was in ag. Now, there's 2%, and now we're producing, more with less. So I think that what this really means is that robots aren't going to do all of our work. They're just going to help, and collaborate a lot more. Often in certain economic, times or periods, what you see is, companies slow down their technology investments almost to a trickle. But, during the pandemic, many companies, or the smart companies, didn't halt their technology investments. And I think this speaks to the value of the digital supply chain in helping, as you talk about, enterprises navigate, disruptive forces and respond faster to supply and demand. So I think big changes are on the horizon for supply chains, and all this is going to result in more efficiency. It's going to result in reskilling supply chain workers, and productivity and growth are going to be the result of this.
So, Bill, in preparing for this interview, we read that the industrial robotics and factory automation industry is actually quite cyclical, which surprised us. Are you able to talk us through why this is the case and the dynamics within this industry?
Yeah, well, I think, the main reason is that they are capital-intensive industries, and they were very capital-intensive in years past. When you think about, putting in a robotic or automation system, take, for example, going into the auto industry. We knew that the robots have been around since the 1960s, and they were basically designed to do dull, dirty, and dangerous jobs, or obviously lift more than humans could. But they were dangerous, and they had to be segmented in certain geographies within a factory and not be surrounded by people, because obviously if there was wrong human action, it would result in injury or fatalities. And when you put a system like that in, it was going to cost hundreds of thousands, if not potentially tens of millions of dollars, because once it was in, it was not going to go out. And I think that, generally speaking, that has been the mosaic that a lot of companies have observed. But I think what you're learning about robotics and AI that's a little bit different right now is that years past, it was hard to put these systems in place because the ROIs on these systems were in many cases, many years. We're talking 4, 5, 6, 7 years to capture an ROI. Now you're seeing ROIs in some cases inside of months. And that's a result of, really computing power that's doubling every 18 months. And the cost of the computing and the integration is plummeting to now create an array of use cases that historically was just Elon Musk science fiction. And that's not the case now. So the industry has been, very cyclical in application. But I think this is beginning to change pretty dramatically as we move forward.
So, Bill, would love to move to some of the biggest companies in the index, because when we opened up the Excel file and looked through the top holdings, we were surprised to find we weren't familiar with many of the names, any of the top names. So for each of the top 3 holdings, we'd love to understand what the company does, how it fits into the robotics and automation thematic, and then I guess a brief word on what the bull and the bear case is for the company. So let's start with the biggest holding in the index, Vocera Communications. Can you tell us a little bit about the company?
Yeah, well, Vocera is actually the largest holding, given the fact that it actually now has a takeout offer. And Vocera is around only a $2.7 billion market cap, and they're actually a provider of hands-free, voice-activated kind of workflow solutions. And they've been they have a takeout offer by Stryker that's looking to acquire them for a valuation of around $3 billion. Which is 10 times 2023 EV sales. And we think the transaction is really pretty amazing because it's highly complementary to Stryker. Stryker has a solid market position with extensive sort of reach in technologies and portfolios around medical devices, and they're well positioned within the hospital and the medical ecosystem. And we see Vocera, their technology, their software, and their communications platform to be an easy sale into their existing base of business. So it's hard to actually, point to a bear case, given that, this is now almost a third of our index, believe it or not, since we launched it a little less than 9 years ago, has been acquired. And so A lot of these technologies like Vocera sort of sit in the sweet spot in the M&A cycle that are delivering a lot of value to investors. And so this is a name that we think is really pretty interesting, and it's hard to create a lot of bear cases to this. I mean, the bear case, we saw it during COVID, where the stock did come under pressure because a lot of spending in hospitals went from pretty vigorous level to almost non-existent for a period of a few months, and a lot of spending on hospitals is elective that ends up being pushed out. We did see that was the opportunity for investors, to buy it. We saw a similar pattern in really a lot of our holdings where they were sort of thrown out with the bathwater and people forgot the importance of the technology and platform that many of these companies offer. Another name, our index that I'm sure you've identified is iRhythm. And they sell cardiac monitoring devices, and this is an FDA-approved, technology. It was actually approved back in 2009. I think as we're moving to a world in healthcare of prediction and prevention, where you can be monitoring someone's, in this case, cardiac rhythm on a daily basis. You're not susceptible to the vagaries of seeing what may happen 6 months out or a year out when you have a physician visit. This is being monitored on a daily basis. There is a massive market, not only in the U.S., but globally for monitoring activities. So, we think this is a name that sits right within our wheelhouse for what we're doing. Another name that is I think the number 3 weighting on our index is AirTac, which is a Taiwanese company, and they provide pneumatic equipment like actuators. Actuators are kind of what makes a robot or autonomous system move with sub-millimeter accuracy. They've seen demand for solutions grow quite exponentially, driven by the rollout of 5G and automation in general. And 90% of their business is actually into China. China has a pretty pronounced template and directive for scaling automation throughout their economy, and they have a 1, 3, 5, and 10-year plan on developing automation. So we think AirTac sits really well positioned in that market as well. And again, all 3 of these names are not exactly household names. I think we try to do, importantly, is, as I talked about before, is identify companies that have high revenue purity, have market share leadership, have technology leadership. We're also looking for companies that invest aggressively, into their business, and that is going to show up in a way of higher revenue, exposure in their business, and also is going to help enable their business. So it's kind of a double whammy. And as a result of this, we find companies that, in essence, are we sort of revenue weight our index. So that's why you're going to see a very differentiated portfolio. And importantly, these are real companies with real technologies and very stable and sound balance sheets. Over 60% of our index has a net cash position and no debt. And if you were to compare that in the U.S. to the S&P 500, it would probably be somewhere in the neighborhood of around 20% or less would have a net cash position. So that's a result of these being really sort of cash generative businesses. And so we are very interested in that as well.
Yeah, it's certainly a very interesting index and subsequently the ETF Securities Global Robotics and Automation ETF. And I think those 3 companies I hadn't heard of before. And that's what I love about investing, coming across companies that are leading the way in innovation, helping society and our lives improve. So it's a fascinating thematic. Unfortunately, we have run out of time though, Bill. But thank you very much. If people wanted more information on what you do, is there anywhere that they can go to find out more?
Yeah, please. I think we have a great resource on our website, roboglobal.com, and we provide a lot of insight into the technologies that we're investing in. We have very frequent podcasts and webinars that we also host, and we have a tremendous amount of content on companies that we write about, white papers that we've written on. More recently, we did a big report on the importance of M&A in robotics and AI and how investors stand to benefit from it. So please use that as a resource.
Awesome. And I'm glad we now have an expert, a leading expert in the industry that we can dial up should our community have more questions. So we've got your number now, Bill. So beware, we'll be buzzing you. But look, thank you very much for your time and for sort of helping us work through this really exciting thematic. So we appreciate it.
You're welcome.
So, Ren, we've just had the pleasure of speaking with William about all things robotic and AI, and now we're joined in the studio by Kanish Chugh, Head of Distribution at ETF Securities, to, as is now customary, talk through the ETF that they have listed that allows us to actually access this thematic.
That's right. So, Kanish, let's start at the beginning. Why Robo as a thematic?
Well, it's funny. When we think about Robo as a thematic, it covers robotics, automation, and artificial intelligence. Now, in our day and age, in everyday life, we're pretty much accessing products or services that have some input within robotics, automation, and AI. Even the fact that when you turn on your Google Smart Home, your Smart TV, when you order groceries through Woolies or Coles, all of that is using some form of robotics, automation, and AI. So it's pervading our current life, and it's only going to continue. And I think a big part actually at the moment is when you think about the supply chain bottlenecks and disruption that we're having, 44% of a recent survey of organizations across different industries were saying that logistical automation and the use of robots will have a major or moderate impact in reducing supply chain disruption. So what we're actually seeing there is robots, automation, artificial intelligence, they're the solution to issues that we're currently facing and issues that we're going to face in the future. And it's not just across, these are companies that, it's interesting to see the industries that they're in.
So with all of these sort of, new mega trends, I guess, that are available for us to invest in, we can either take the direct route and invest in individual companies, or we can take that passive route. You guys have created the ETFs Robo Global Robotics and Automation ETF. The ticker is ROBO. So why is a passive ETF the right way to invest in a thematic like robotics and AI?
Well, for this ETF, we partnered obviously with the Robo Global team. So, you guys have just spoken to Will Studebaker. He is, the premier sort of authority on everything a part of this megatrend. I think the Robo Global team in itself are really unique in the sense of they actually started off as stock pickers. There was a combination of a number of stock pickers that came together to decide, well, there is no index tracking this thematic because it's really hard. How do you define this thematic? There's no sector classification. There's no GICS classification. We've got companies that are part of the enabling technology. So these are basically companies that are involved in sensing, computing and AI, actuation and integration. So essentially the technologies that allow intelligent systems and artificial intelligence systems to interact in the human world across many industries. And then you've got the actual application side, so the actual good side. So whether that's, healthcare, 3D printing, food and ag, autonomous systems. So you've got all of these different areas. So for a stock picker, how are you to know which one to look at? And, Robo Global often talk about we're not there to pick the winners or losers. We're there to invest in the theme. So this ETF tracks that Robo Global Index. It's got over 80 companies that are looking at this thematic across various different sectors. And to your point, if you were to look at, some of those names in the portfolio, I'd be surprised if people knew all of them or even some of them, because that was the interesting thing when I remember looking at it a few years ago when we launched the ETF. Yeah,
it is fascinating. I am used to opening up the top holdings of an ETF and recognizing at least some of the names. I like to think after doing this podcast for 4 and a bit years, I'm recognizing more and more of the names, but I can confidently say I hadn't heard of any of the top 3 of this ETF. Vocera Communications, iRhythm Tech, Harmonic Drive Systems, which is exciting because it's just a whole nother world that we get to explore as investors. So maybe talk to us about some of these biggest holdings, Why these companies? What do they do? Why should we be excited by them?
Yeah, so Visera Communications, for example, they essentially have a unique comms and workflow platform for sort of the hospital system. So they're very much focused on the medical field. You've got companies like Intuitive Surgical. So they create what's called the Da Vinci machine. Now, the Da Vinci machine is essentially a robot that does mid-body surgeries. You can peel a grape with the use of that robotic arms of a Da Vinci machine and sort of stitch them back up together, all in the comfort of another room across the world. So, that finite movement, trying to remove the stammer from surgeries and surgeons. You've got companies like iRobot. People know of iRobot, so that's a fairly common name. It's they make those Roomba vacuum cleaners, so the robotic vacuum cleaners and mops. But what about Fanuc? Fanuc are very much in that area of manufacturing and logistical automation. You've got companies that people may know of, for example, Ocado. Ocado is a UK-based grocery logistical company, and they feature in the portfolio. They have a tie-up with Coles here in Australia to do the fulfillment centres. Part of the reason why I think when you look at the portfolio and you go, well, I actually don't know a lot of these names, it's because of that Robo Global team. So they've got teams of research, analysts, but they've also got a team of strategic advisors. And those strategic advisors are experts in their field. They're actually former entrepreneurs, professors. The head of MIT's Robotics Centre, Daniela Rus, is part of that strategic advisory team. And you talk about Amazon Robotics. So Amazon Robotics, before Amazon bought the company that is now Amazon Robotics, was called Kiva Systems. The founder of that is a man by the name of Rafaela D'Andrea. Now, RAF basically sits on the advisory committee for Robo Global's index. So they're speaking with the Robo Global team and telling them, guys, you need to be looking at certain areas of this megatrend. You need to be looking at 3D systems. But within 3D systems, you need to be looking at commercial 3D system companies. They're setting up meetings, providing them insight into those companies as well. So that's why we end up with a portfolio that is very different. And the weighting of them is also unique. So each of these companies have to have a high revenue purity to the theme. They've got to be innovating and they've got to be market leaders. So you can't have a company in there that's like Amazon, for example. Yes, they've got Amazon Robotics, but they use Amazon Robotics all for themselves. They don't generate any revenue for it. So Amazon will never feature in this portfolio, even though they've got one of the biggest, robotic businesses in the world. It's purely for their own purpose and their own service. It's not for anyone else. And something just on the portfolio, and people sometimes talk about, well, why can't I just get this through buying the S&P 500 index? Why can't I just do it by buying, a MSCI all-world broad-based global ETF, for example? Or they look at some of the other ETFs looking at this thematic. The crossover between the current portfolio and the S&P 500 is 3.4%. The crossover between this and a broad global portfolio, such as a MSCI all-country world index, is 3.2%. So what you're trying to say there is you may get some of the names, but you're not getting the concentrated focus and attention that you would, and you may not get all the names as well. So again, sometimes it's hard to be the stock picker. Sometimes it's hard to try and take the broad approach. If you want the thematic, it's easier to go down finding these thematic ETFs.
Yeah, I used to work in retail, and part of my job was to actually look into all the robotics that were coming through in the sort of retail industry, and it was fascinating and exciting to see the innovation that was coming in, but there are also so many companies to sort of sift through. So having that advisory board as part of the, guiding the selection of these stocks, I think is a great asset for this ETF. So Kanish, just to close out, any sort of final thoughts, I guess, on your thoughts, future prospect for the industry, any numbers to kind of paint the picture for the outlook? What are your final thoughts?
Yeah, I think my final thought would be, in the current climate with people concerned about growth stocks, this particular ETF, because of its tilt towards industrial, those sorts of manufacturing companies, it's got a tilt towards cyclical, which is interesting when you think about a thematic. You generally think it's growth, but no, it's actually got a bit of a value tilt to it. About 40% of the portfolio is tilted towards cyclicals. You also look at the companies within the ETF, and 57% of Robo's portfolio have a net debt of less than zero. So they have no debt, net debt. You look at the S&P 500, it's about 18% of companies have that are net debt of less than zero. Nasdaq 100 is 48%. So you're looking at very strong companies as well. Again, companies we may not have heard of, but very strong companies. And so you're either looking at, it's got the value tilt. People, as they start to reopen, there is this increased demand. If you think about supply chain bottlenecks, well, these are the sorts of companies that are probably going to be the solution for that as well.
Well, Kanish, as always, thank you so much for your time coming on and sharing your thoughts on the Robo thematic. The ETF is ETFS Robo Global Robotics and Automation ETF. The ticker is ASX Robo. Where can our listeners go to find more info and to understand if the product is right for them?
Sure. The best place to go is the ETF Securities website, etfsecurities.com.au. On there, you can click on the product lineup and click on Robo. You've got the PDS, the full holdings. So all sort of 80 plus names are there, and the TMD for the fund as well is there as well. And obviously speak with an investment professional for any advice that's personal in nature.
Nice one. Well, I think we say at every episode that we love the innovative ETFs that you guys are pushing out, and can't wait to see what's in store for 2022. But yeah, it's been a pleasure chatting. So thank you very much.
Thanks a lot, guys.
Equity Mates Investing Podcast is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Equity Mates Investing Podcast are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website, where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Equity Mates Investing Podcast acknowledge the traditional custodians of country throughout Australia and their connections to land, sea, and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.